Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities set for a volatile ride on F&O expiry session. GIFT Nifty signals a muted start coming in for Indian equity markets. Wall Street overnight yo-yo to mixed close on Wednesday. Uptick in treasury yields and oil prices put together dented sentiment. If you talk about the benchmark 10-year yield, treasury yield, it hit the highest levels since 2007, ahead of the key macroeconomic data, which is about to release. Talk about Asian markets, trade lower, Hang Seng and Nikkei down nearly 1% in early deals. The last time I checked, there was a nervousness in Asian market around Chinese economy after Evergrande shares were suspended from trading in Hong Kong. FIIs, they continue to sell shares to an extent of 354 crore and DIIs have bought shares to an extent of 386 odd crore. In terms of what does the F&O Qs essentially suggest? FIIs have been net sellers, at least when it comes to the index futures. They've been buyers for the index options and buyers in the stock futures. However, the selling overall continues even for Bank Nifty futures. Along with that, there is a bit of traction coming in for Bank Nifty options. So that's the word coming in, perhaps a bit of buying interest coming in on the option side there from the FIIs. Let's talk about F&O ban. Delta Corp, that still remains in the ban. It's not come out of that. India Cement also continues to be in that list. What is out of the ban somehow is Balrampur Chini, Indiabull Housing Finance, Hindustan Copper and Canara Bank. These are the ones that you need to keep an eye out on. Option Qs, if you talk about the PCR, it's still below that one mark, 0.92 versus 0.91, indicating that there's still, the markets aren't really in the overbought territory anymore. Stocks to watch out for that we'd be looking at. Well, there is a list out there they're going to be talking about, but let's actually address in the day's traction, the strategy, and the recommendation that we have for our viewers this morning. And to take the discussion forward, we're being joined by Chandan Taparia, the Senior Vice President, Heads Derivative and Technical Research at Motilal Oswal. Morning there.
Good morning, Nickey. Thanks for having me.
Chandan, our pleasure is always ours. It's just F&O expiry session. I was just checking the last 6 sessions. Nifty has wiped off almost 400, 500 points altogether. Journey from 20,100 to 19,700, so to be precise. Do you see more losses coming in? How do you see the next series panning out, strategy for the next series and also for the expiry day?
So, talking about Nifty, even after all ups and downs, as of now, the index is up by around 2.4% on expiry basis. We have witnessed good recovery from 19,225 to all the way to 20,222. But then it witnessed retracement of 61.8%, which comes near to 19,555, 19,600. Yesterday, it exactly turned from its 50-day exponential moving average, headed to 19,735, negated the formation of lower highs of last 6 trading session and finding some sort of stability. So I believe that again, positive to rebound bias could emerge in the market. In the entire series, as of now, the open interest is up by around 15% with slightly surge in the price, which indicating overall longs are intact. Rollover is near to 61% with roll cost of around 0.56%, which is also indicating that longs are rolling. So I believe that immediate support of 19,555 could provide the cushion, and because of that, some more recovery could be there, which can take it to us 19,850 level. So 19,550 to 19,850 is the range we have to play with positive to rebound bias in the Nifty index.
Talk about your strategy on Bank Nifty also. Sure, the expiry has been moved, but also something that you'd want to talk about.
Yeah, so today is the Bank Nifty expiry. So in last 1 month, we have noticed that Bank Nifty expiry, weekly expiry is on Wednesday, but today is the monthly expiry, so that's why it's on Thursday. So if I look at the expiry on expiry basis, Bank Nifty just marginally up by around 0.3%. So comparatively, Bank Nifty is underperforming. In a couple of days back, it failed to surpass the previous lifetime high, which was near to 46,369. It just made high near to 46,300 and corrected towards 44,100, 200 marks. But the good part is some recovery was seen. But concern is we are trading below all the volume weightage average. So series volume weightage average is near to 45,200. Weekly volume weightage average is near to 45,650. We are slightly lower than the same, so kept upside could be there. So 44,250 to 44,800 is going to be the range with kept upside in Bank Nifty. So slightly underperformance could be there, but Nifty is finding support at lower levels. So if you ask me to compare both the indices, Nifty we will go with positive to range bound bias. Bank Nifty we will wait for some consolidative move in the market.
Sure. I'd also want to chat about your recommendations, especially the one that we have for L&T, where the settlement date has perhaps been pushed to September 29th in place of 28th, because obviously it's an off for the currency market and the bank, the banking sector put together. But L&T overall, given the buyback plan that they had and the settlement that needs to come off, how are the charts looking at?
So charts look quite impressive in L&T. This stock is up by around 10% in this series. We have seen good run up mainly on the 7th of September, where good open interest addition added. After that, the stock has seen consolidation in last 10 days, and yesterday we have seen a decisive hold about 29.50 level. It has given a consolidation breakout. So because of such price formation, more up move could be there. 2900 is immediate support. It can head towards 3050 to 3070 level. However, we have seen some call writing at 3000 mark. So because of that, 3000 could provide act as a hurdle for day point of view. But then we are looking for 3050 to 3100 zone in L&T.
All right, that's the word coming in. Apart from that, any recommendation for our viewers out there? Overall, how is the September series stacked up for you, Chandan? Anything that stood out for you?
So like in the month of September, usually we notice that September is overall okay for the market. Rollover as of now is 65% for Nifty with roll cost of around 0.56%. Stock-wise, we have seen good activities, positive on the capital goods, auto name, even selective public sector enterprises stocks were doing well. So if you ask me few names, I'll focus on the Polycab. It has given a consolidation breakout, so up move could be there. Overall, we have seen open interest addition of around 36% in the entire series. Stock is up, given a consolidation breakout of 14 days. So 5600 kind of level could be there. Apart from that, most of the auto stocks will be in focus. And I believe some positive attraction will be back in Telecom name as well.
Anything specific with Telecom names that you were talking about?
Yeah, so in Telecom, I'll talk about Bharti Airtel. It seems that consolidation of last 8 days is getting over. Overall, the stock is up by around 7-8% in the series, trading at almost lifetime high territory. Overall supports are shifting higher. Some sort of pole and flake breakout is visible in the daily chart. We have seen some short covering as open interest shaded. Open interest is 81% now. We are expecting 10-12% more open interest addition today. So entire setup indicating positive move towards 950. One can buy with support of 905, 906 and really can extend to 950 zone.
That's the word coming in, but let's actually also address in some stocks and news that we have, and then go back to Chandan and chat with him. Perhaps, which could be further spoken about in the day. Of course, Yatra is the one that you need to keep an eye out on. It's a new kid on the block, got to be listing in at 10. Debuting in on the exchanges on September 28th. The issue price has been fixed at 142. According to most of the analyst community, the debut is likely to be a disappointing one. The company and the shareholders, the issue essentially was subscribed just about 1.7 times, which was much lower than most IPOs being launched these days. But we're going to be addressing in markets open and then go back to stocks and news. That's the one coming in. Well, we are looking at a positive start coming in for the markets. It is up with gains to an extent of 0.2%, 19,700, way above that mark for Nifty 50 index right now. Let's also talk about Bank Nifty index just to see if there's a bit of traction building up perhaps for Bank Nifty index too. Well, almost gains equal or in line with what we have in terms for Nifty. Perhaps a bit of, we need to see how something like an HDFC Bank and other private sector banks are doing, perhaps an RIL along with that. But let's actually move into HDFC Bank right now is holding up neck and green with gains to an extent of 0.3%. And if you talk about the other, stocks that we have, Reliance has been doing well to an extent of 0.4%. And if you talk about the other, maybe mid cap and the small cap index, just to see how is that stacking up right now, the trend seems to be in line with the with the larger counterparts. 0.2% of gains coming in for the mid-cap index overall. Along with that small cap index, we're looking at gains to an extent of 0.5% out there on small cap index. Even if you talk about the sectoral indices that we have on the chart, IT it's holding up the neck in green with gains. Well, it's a flat start, honestly, for Nifty IT with some amount of positive bias. In terms of pharma, well, some amount of gain, modest gains coming in for that one. 0.1% of gains coming in even for the pharma basket. In terms of other sectoral indices that we have on the list, FMCG right now done and out. Perhaps a bit of a negative undertone playing out for the defensive names in today's session, like that of FMCG. But our auto too is, probably has opened in flat in early deals, and it's a bit with the negative bias. Let's also talk about realty index right now. It's it's up in green with gains to an extent of 0.2%. And in terms of other sectoral indices that we have on the chart, let's actually see how is that tracking up for you. Metal is doing well. The China story continues to play well. Infra story in the run-up of the election should continue to do well for overall the metal basket, and so to say, even the entire consumption basket, so to say, in terms of industrial specifically, that needs to be watched out for. Nifty 50 right now, 0.1% of gains coming in. It is a little below that 19,750 mark right now for Nifty 50. Whether that mark will be captured or not remains to be seen. Let's actually bring in the Nifty top gainers and the losers that we have in early deals, just to see where the momentum is stacking up. And for you, L&T, well, that's the one which is up in green, and we spoke about it. Tata Steel, Axis Bank, these are some of the other gainers that we have on the list right now, along with Coal India, DV's Lab, and Bharti Airtel. These are some of the other gainers that we have on the list right now. Let's also talk about the losers there. Well, if you talk about the losers, it's mostly got to do with IT and auto. Tech Mahindra, Asian Paints, Eicher Motors. These are essentially the losers that we have, along with Bajaj Finance, Titan, and Grasim. The trend is pretty much divergent, and there's no specific theme which is particularly in focus in early deals. But L&T is clearly the one that we need to talk more about. But first, let's address in more stocks and news that we have for you this morning. We've already spoken about Yatra. Let's talk about L&T, which is the top gainer. Essentially, the company says the settlement and the payment of the buyback is essentially going to be taking place on September 28th. This was earlier supposed to take place on September 29th, changed due to the change in bank working day from September 29th to September 28th. So there's a bit of early prepayment perhaps which is coming in for L&T due to the settlement which has come through on account of the holiday, bank holiday on September 29th. It was decided that it's going to be happening on September 29, but it's happened through on September 28. I stand corrected with that. Overall, that's the word. This is with respect to the buyback. The development has come through, and the settlement is on account of the unaccepted equity shares and the payment of consideration to eligible shareholders who've participated in the buyback thus far. So that's a big development. On back of that, you're seeing L&T doing well in trade. Nazara Technologies, yet another gaming company which apparently has received a tax notice, 2.83 crore of tax demand from GST Director General GST Department, where with this now, to bear in mind the fact that the diversified gaming and sports media company becomes the latest to receive a notice after Dream 11, Games 24/7, Gamescraft, and also Delta Corp in the recent week. However, this tax demand is unrelated to the current issue of retrospective taxation that is still haunting country's real money gaming sector, according to Moneycontrol sources. Now, that's the one that you need to watch out for. Nazara Technologies up on screen for you just to see how is that stacking up. But also, let's also talk about telecom companies out there. They've reported their July telecom data. Reliance, where there is Reliance Jio, where there is a net addition to an extent of 39.1 lakh users that have been added. Bharti Airtel has added in 15.2 lakhs. Apart from that, Vodafone Idea, that's the one which has lost 13.2 lakh users for the month under review. Now, if you talk about just the market share performance, Reliance, after adding that, Reliance Jio, beg your pardon, after adding in that 39.07 lakh users, is up significantly, and with this, the firm holds 38.6% of the market share of the wireless subscribers. So that's the word coming in for Reliance Jio. Bharti Airtel on the other side has also added. The current market share now stands at 32.74%. But if you talk about Vodafone Idea, that's the one perhaps which has taken a bit of hit, has lost more subscribers, and the market share right now stands at 19.9%. So that's the word coming in even for the telecom companies, the developments that we have in early morning. Vedanta, that's another one, perhaps a bit of dropping that already came in the counter in the previous session, and today's session is a bit different, a bit of recovery after the 2-year low level that we saw for Vedanta, right? The company is now nearing a deal to spin off its business into several listed entities, and the spin-off is a part of a broader restructuring plan, and the lenders of the restructuring are expected to announce the plan in coming days. Now, they have various businesses: aluminium, oil, iron, steel. All of them, if the demerger takes place, will be listed as separate entities. The move essentially is done so that they could help Vedanta's parent company, that is Vedanta Resources, the debt position of which has been quite languishing at the bottom for a couple of quarters now, if not for years that I remember. Well, Vedanta, if you look at that, the stock is doing well in trade, and this is an exclusive report that we have for Vedanta. Also, let's actually see if Chandan is still around, and we can check with him what does he make out of something like a Vedanta, because that's the one where a lot of drubbing has already taken place. There's a bit of development that we have in early deals. Chandan?
Yes, if you talk about Vedanta, this stock is continuously falling down, making lower top, lower bottom. However, today it recovered, but I'll avoid because chart structure is in pressure. Till it doesn't surpass 220 zone decisively, I think better to avoid, or again bounce could be sold. So I'll avoid going for long in the counter.
All right, avoid going long on the counter. But Chandan, we'll just leave it at that, and thank you for taking out the time early this month. All right, let's bring in our fundamental guest, Pankaj Pandey, heads retail research at ICICI Direct, to talk more about the direction of the markets, F&O expiry, macro cues. What does he make out of the market direction right now? How comfortable do the valuation look? What is he recommending at this point of time? Morning there.
Hi, good morning. Thanks for having me. See, on the market overall, our sense is that by Diwali, we would be expecting levels of 20,700 kind. I think what we have seen, or what we are seeing as of now, is more of a consolidation mode for the market. And because after a 1,000-point rally, somewhat of a consolidation was expected, and probably this consolidation in the range of 19,500 to 20,000 would continue to be there for some time. But our sense is that the volatility is probably likely to sort of subside, and going forward, I think numbers are from a quarterly numbers perspective. Our sense is that when you look at last year, the overall margin profile for Nifty companies was 14.5%. In Q1, we closed at about 19%. So benefit of lower base for margins is definitely going to help companies in general. Our overall sense is that Nifty earnings could be growing at about 16.5% kind of a run rate, and which is why I feel that fundamentally target is 21,500. I think near term, what we are sort of liking is because one, monsoon is over and festive season is coming up. So we like autos. And besides that, I think infra is another segment which hasn't done much in terms of price performance. So I think that is another segment which we feel ideally should sort of do well. And I think overall our sense is that there are still opportunities both in large caps, mid caps and small caps.
All right. Anything specific that you like within the space when you speak about mid cap and small cap before we deep dive further into the online gaming companies and the issues that they've been facing, especially the one like Delta Corp and Nazara, but any other call in the mid cap space?
So, for example, I think in the banking and financial services space, so besides SBI, what we like is Bank of India, which is trading at 0.7 time book. We also like some of the private sector banks, like say for example South Indian Bank, which is also trading at 0.7 times, something like Karnataka Bank, which is also trading at about 0.8. Typically, in a good cycle, these banks can inch towards one-time book, so which is why I feel that banks are looking at as an attractive option. Then I think besides that, what we sort of like is some of the infra-oriented names. So we have PNC Infra, which we like with a target price of 460. NCC we like with a target price of 170. Then you have Ahluwalia Contract, which with a target price of 800 is what we like. We like something like Sagar Cement, which is trading at about $50 in the cement space, because the overall sense is that the construction activity should pick up pace, so the entire value chain should benefit. And besides that, in autos, what we like is tier one names like say Maruti and Tata Motors, and in tier twos, something or in ancillary space, I think Exide is sort of shaping up well. So that is another stock what we like.
All right. I'd want to chat about something like a Delta Corp and Nazara Technologies essentially with you. That's the one perhaps now Nazara Technologies being the latest one which has received a show cause notice from the Director General of GST Intelligence for a taxed amount of around 2.83 crore now. It's the latest in the list. You have something in the like of Dreams also. The other online gaming companies, Delta Corp saw a huge crash coming in after the development came through. What do you make out of it if these taxes were to be levied from the retrospective effect that they've been talking about? What does it mean for online gaming companies? They've been contesting about it. But would you want to recommend the investors probably to stay away from such stocks, or how are you looking at it?
So usually we have never chased or never covered or never recommended these stocks, largely because one is that you have a heavy regulation in place. And I think we are still not sure in terms of, there is still sort of a conflict in terms of what the government is looking at a total betting value as well as the total amount being put. So I think there are a lot of ifs and buts in this segment overall. And I think whatever volatility what we are seeing in price, I think till the time regulations do not sort of sort out themselves, this is one space one should be clearly avoiding. I think from a travel and tourism, you have a lot of players like say Mahindra Holiday Resorts, you have Lemon Tree, or you have Indian Hotels. I think which are direct play on the overall tourism as a space. I think that is a better space to sort of look at.
How about, what do you make out of something like aviation stocks right now? You think the upcoming season could spell a bonanza for all these aviation companies as it coincides with a seasonally strong third quarter because of festive seasons and holiday put together? I think the only spoiler would be crude oil, but do you like anything from that space?
You rightly mentioned that crude is now inching up to $96, $97, and with these elevated prices, obviously for aviation to sort of do well, a lot of things need to sort of get it right. We are already seeing higher attrition levels for pilots, so that is also sort of a challenge. And so when you have so much of a ifs and buts, typically it's very difficult to sort of take a call, and which is why, like I said, we would be preferring more of hospitality-based players rather than aviation, because here also we still are not very sure in terms of how the slot, whether we would see auctions or slots going forward, which is a global practice. And that can sort of change the dynamics for the sector. So, and then you have an unlisted player which is sort of gaining market share. So they've already gained market share in excess of 30%. So I think there could be a near-term positive momentum, but we're still not chasing some of these listed names from a portfolio perspective.
All right. Also, what do you make out of something like a PFC and REC for that matter? The stocks continue to do well, but the valuation, if you look at that, they're currently trading at a book value of around 1.3 times. In 2011-12, you have, something like a PFC, REC perhaps being trading at, they were quoting at 2.5 times book value. Sure, the loan book growth at that point of time was much higher. But with that valuation perspective, do you like these stocks right now?
I think when you look at power as an opportunity, that's a very interesting opportunity which is coming up, especially on the green side, because you would typically require, say, if government is targeting 5 million tons of green hydrogen, you would require about 1.25 lakh megawatt kind of a power capacity, and that will largely green. And obviously, the financiers also benefit from this aspect. But I think what we have seen is that good amount of rally already sort of playing out. Wouldn't want to sort of chase or recommend chasing at current levels. All the opportunity size is quite large because you are looking at 5 lakh kind of a megawatt kind of a capacity. So obviously the capex is large and there's good opportunity for both PFC and REC. But I think what we would typically prefer to sort of play this opportunity is with something like NTPC, where target price is 300. I think this company is already some 73,000 kind of a megawatt of thermal capacity. What you're going to see addition going forward is about 60,000 megawatt kind of a capacity in the next 5-6 years. And it's trading at about 1.6, 1.7. So I think valuation wise also it looks okay. And then I think banks are also a sort of an indirect play towards that opportunity, especially the PSU banks. So I think PSU banks look relatively better with valuations, because valuations for PSU banks also can sort of inch up. If bigger opportunities sort of unfolding, then I think PSU banks still have a lot more juice to left, and also some of the power names like, for example, NTPC.
All right, Pankaj, we're just going to leave it at that. And thank you for taking out the time and speaking to us in the morning.
Thank you so much.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.